So guys, we are currently on the New York market as I speak. Welcome everyone. I will just use this opportunity to talk to a few of us that may connect with me. So the inventory report just came out, and so guys, good afternoon, anywhere you are. So as look, I know that some of us are at work because of the time factor when the market came out, the report came out. But if you be trading with us on live, you should be able to know the things we are doing as I speak now. So the report is out. And we have about 3.4 million shortage. 3.4 million shortage. And we have also been buying oil, which is also a very good one. So I'm trying to get you into the market to see what's going to happen. I'm sure some of you are trading. You're all doing well, guys. Okay, some people want to connect to me on the Zoom. There's no problem. I'll be happy to see you guys. But you're actually coming late. You're actually coming late. You are coming late a bit. Oh, please, if you So I want to be sure you can hear me. Some of I have some people who are with me here on the stream. I have okay, I have Tony. Is it Tony? I have Tony. It's here. Also have Esther. Yeah, someone is typing me privately. I have a private chat here. Yeah, someone said I can hear you. Okay, perfect. Yeah, so this is live trading, but let me just give you guys a quick update. Some of you are coming late. Some people have even left. Some of you are coming late. So we are expecting 400 pips on oil, which is going to give us about $4,000 profit on a $10 volume. Let me give you the report. Okay, but let me check the market. So the market so far, oh, okay, the market so far is even was a bit good. But let me share the report first with you guys, because I told you if you if you're with us to this time, that will give you some brief introduction about how the commodity market works and how you can gain from it. But you guys came late. You literally came late. I hope you can hear me very clear. Okay, so basically we we have um, we have about 3.4 million barrel shortage of supply. But some of you that are new, you may be thinking, what is oil trading? You know, in the financial market, uh, which is popularly called forex, it's not only currency pairs that is being traded. We trade commodities there. Then we trade indices. We also trade some stock. We also trade some other metals like copper. If you check some, we also trade some of other a lot of things we trade on that on the financial market. But the nature of trading there cause CF the contract for difference. So it look as if everything is the same. But of course, the forest not to cover the major household in the forest. But so when you check your platform, you see that you're gonna have a lot of instrument there. It does not necessarily mean that they are all forest. Forest just for a financial currency instrument. Like gold is not necessarily a currency, but it's a commodity. Oil is not necessarily a currency. Of course, oil is not a currency. Oil is a commodity. So each of them you see there has different fundamentals if you must understand them. So the same way each of them you see on technical also have a little bit different types of technical. So you must be able to understand them to be a good trader. Yeah, you must be able to understand them. It's good. It's not really maybe something of maybe strange story. If more people are failing in the trade and few people are succeeding, that's how life is. Even here in our real life, we see that more people are not succeeding, while more few people are succeeding in any area. So there's no possibility of people coming into forest trading, where you see more people that will gain and few people that will not succeed. No, even in education, few people get first class and second class. Every other person get third class, and some people struggle to even pass them. That's how it has always been in life. Now, what makes exception is those people who are successful. If you check very well, they are genius, they are guru. They did something extraordinary. Which, if when it comes to forest trading, a lot of us, majority of us, 70 to 80% of us, are not necessarily eager to go into that lane to learn. Now, what we said, if you check those charts you're trading, you see a lot of instruments, but inside them there are different things you need to observe, such as some of the factors that move them independently. Yeah, the whole chart look alike. It look, candlestick chart is the most popular chart. It look alike. It goes up or down. So you maintain that all of them are the same. Just like in the same classroom, everybody look alike. We're in the same level one, level two. But intellectually and psychologically, we're not the same. That's why we can write the same exam, and some people will fail, some people will pass. So that's also how it is in trading. So when you check oil on the chart, it looks the same, but you need to know some of the basic fundamentals and also some of the basic technical that is different from the way you see it on the forest. The same chart, the same up and down, but different fundamentals and different secrets you need to know. So that is the basics of this time, that you as a trader, you need to know how oil is traded and what move them, and be able to know how you can be able to make profit on it. Yeah, whether you trade it on CFD or you trade it as a future or you just trade it as a spot, they are all the same. You just need to know some of the things. So why I'm saying this is that this class now, I just want to give you a brief information about it. So the crude oil inventory is one of the major things we look at, and the oil in general is one of the commodities we trade in the financial market. What moved the oil market is a little bit different from what moved the currency market. If you talk about currency market, you see a lot of things. So one of the major things that moved the oil market is demand and supply. And that demand and supply, we treated demand like yesterday on our outlook. Then now we are treating some supply today. So there's a supply that we used to get from EIA, Energy Information Administration. They usually release this information every Wednesday, and this information talks about the quantity of stock, the quantity of available crude oil for trading. And you can also see other information. This information I'm sharing with you now, I got it from EIA. If you check the address bar, you see that it came from EIA dot .gov. That's United States. So these are the information about supply of oil gotten from different oil companies globally, including the companies in Nigeria. Every Wednesday they release it. So if you check everywhere, they say excluding those in petroleum reserve. It means that those that are on reserve is not part of this thing. So they're talking about the ones available now. That there's a shortage of 3.4 million released this week for trading, and the investors globally, including you and I, can use it to trade. Those that speculate, we speculate on it. Those that invest on it, we invest. Those that maybe want to sell them, we sell it, because of the report of the inventory report. Now, this is what you need to know as a trader. If you want to be an oil trader, you need to be able to know how this report is released and how the inventory report affect the price of oil. So here now we saw decrease. That's a decrease in supply. It means that there's a little bit of shortage compared to what they were expecting. So if you check on the forecast, which is on Forest Factory here, you see that they were expecting minus 1.9 million, while what came out later become minus 3.4 million, which is obviously far better than what they were expecting. So, but if you don't know all these things, you think that all of us are the same. We are not the same. That's why all of us cannot fail in trading. Yeah. So you see that we have 3.9 million, 3.4 million, which is much better. And you can see the data where how it is being supplied since about a couple of weeks now. We have oversupply here, oversupply here. Then before then we have shortage of supply now. That's it. There's also another report coming from EIA, API, that we usually receive every a night before this one. It's also a very powerful report, but the major one the world pay attention to is this EIA. I'm referencing to those people that are new and also those ones that are old. You can also use this thing to understand the fundamental of oil. It's very, very important. So when you open a trading chart, everything looks the same, but not the same fundamental. For example, now we have Profem. Everybody would think that Profem platform is the same, or these are like a model of trading or a model of business using the same environment, but a different model. That's how it is in trading. Some of you came to trading through Profem, and it has already given you a perspective about trading. It's all about buying account. That's how you came in. Now, this is what we started doing yesterday. Now, this is the crude oil market, and this supply, technically or fundamentally, when there are lesser supply like this, we expect the price of oil to rise. But now this is the current price, and this is the zone where the market has been trading. So this is the current price, 59.13. Yesterday, the price was up to 60, but this morning, sharp drop that it drops. Now, what you need as a trader now, look at it now. The, pri the price has dropped. The price has dropped to 59. That's a pretty lower price. And there's a shortage of supply of 3.4 million. 3.4 million. So those guys that are already experienced in trading, let me hear from you. What do you think that we're gonna happen in the market? We are expecting 400 pips. Okay, you're expecting a bullish trend. Mm-hmm. Okay, fine. They said here they said EIA reports EIA reports surprise crude oil inventory. That is the report we're receiving as I speak to you now. The reports the report here suggests a surge of crude oil. I hope you can see that. Yeah, they said oil inventory in the United States decreased by 3.4 million barrels. This is from the oilprice.com. During the week ending of November, after gaining 6.4 million barrels last week. So this gain means after more surge. So global oil demand also surged in September. That's another breaking news. Global oil demand also surged in September. So now we see where we are getting the information on oil now is different from where you used to get information about forest, but the same platform. I'm talking about those people that are new. So you need to know them so that you can be able to understand. Another thing you need to know when you want to trade oil is also the same price action. Price movement of oil is not necessarily the same with price movement of currency. Even those currencies you trade, if you study them well, you see that the price movement are not the same. These are what makes somebody more successful than you. If you try and get tired, you close your laptop and think that all of us are the same. We are not the same. We keep want to learn more and become more better than other person. So that's why I always encourage you guys to understand this things and learn it properly. But there's information that came here before. They say oil price sink 3% as rising US inventory deepening oversupply. So I think this may be the problem why the market came down, guys. So it's becoming interesting. The oil price plump in early trading on Wednesday, which is today, as traders reacted to another rise in US inventory. So traders were expecting that the market is going to rise. Okay, now this is opportunity for us to buy again. So guys, let's go back about it now. So now the reason why the market came down was that traders were expecting that there more supply. Who's a smart trader here? My mind is hitting. Oh, I think Cynthia is a smart trader. So Cynthia, I don't know if you're in the office. You can speak to me. So can you see the psychology now where the market came down? The market came down about 3% because of there was a fear that there may be more supply. And as you can see, since about last week there was 5 million supply. Last 2 weeks 5 million supply. Last week 6 million supply. They were expecting that there's gonna be more supply again. So probably they sell off. Now, what is psychologically going to happen here now? It could be that since their plan, what they were afraid of is not what happened. So the market will most likely start going up again, and we have met it at a lower price. So for my analysis now is that we're expecting to go back to the market again and hit another buy at this price, and we also expect to have. Let me share the screen properly with you. So it's a very big insight now that kind of very, very insightful that could give us a lot of profit. So we're expecting to hit another buy this price. at this particular price, we should hit another buy at this particular price now. And let me check estimated profit we're gonna make. Our estimated profit should be, the first profit should be 200. That we will leave around 60.90 per barrel. That's under 200 pips. So that will be our estimated profit. So we hit like that on WTI, hit like that on Brent crude. Brent crude, we should also leave around Brent. We should also leave around 64. 64 is fine. No, this price. Yeah, no, yeah, we can leave around 64. 64 is fine for us. That's a 159 pips. We should leave around that side. 64. Let me check. Yeah, most likely they're gonna get 64. Okay, let's say $65 per barrel. We can leave around 65. That way, estimation of 350 pips, additional 350 pips. That will be our estimation. So this 350 pips now, if you're using $10 to trade it times 350, 350, we're gonna make how much profit? 350 pips with $10 volume. We're gonna make $3,500. That's what you're gonna make. So depending on the broker you're using, we're gonna make $3,500. So most likely traders gonna hit the market again. That's what we're gonna make on this one. So our loss, our risk, we should expect our risk should be 61, around 61.50, which is this area. This our risk should be 61.50. That is on what do you call it? That's on Brent 61.50. Then our profit, our risk on this one should be, no, it's too far from there. Let me check this one. Our risk should be 57.50. Yeah, that's on Brent 57.50. That will be our risk on this, but this should be our expected profit so far on Brent crude. So potentially now, those of us that are learning now, look at what happened. When you want to trade, we look at more than one factors, more than one reason. Now the price is relatively low, which is a good reason. Two, there are fundamentals that have confirmed that there are lesser supply. Three, there were fear that EIA will supply more oil. So people started selling off. The price came down. Now, EIA supply lesser oil. It may build client confidence to buy more. And luckily for us, we have met it at a lower price. So our buy analysis still there valid. One thing I told you guys about trading, don't use the emotion, use the rules, use the laws, use the rules of trading. Now, when it comes to demand and supply, which is gotten by EIA for supply, and even EIA also report demand, it says that if there are more supply of a particular product, let's say on oil, it could trigger demand to go off. So demand can weaken demand, and if demand is weakened, the price will drop. If there are lesser supply, it can trigger demand, and if demand is triggered to buy more, the price will go up. So these are the law, and this law guide every other business. In forex instrument, we might not get it exactly like this. That's what I'm trying to know the fundamental behind every instrument we see on a chart, so that you don't think that all the charts are the same. But on gold is similarly to oil. Gold, you can easily, that's area we usually go and get demand metrics on gold. Like this year, I told you that demand on gold is high because I was able to speak with some of the miners I know. They told me that there's a high demand on gold. Even till next year, they have even placed more demand. Like demand on gold is too high, so that's why the price of gold keep going up. People have already paid miners ahead of time. I mean, the regulated mining market, not the black market, which is the people that controls the price more. So there's already obviously demand on gold. So there's area you could go and get those factors, how much demand they're placing on gold. So that demand can tell you that, okay, this price will keep going up because there are more demand. And now the demand on gold is higher than the supply of gold. What the miners are able to mine is lesser than what what people are demanding. So that's why gold price is still going up. That's the area we used to go and get them. You're looking at this year MT5 and Telegram group here, if you follow and you follow, may not be able to give you those things. That's why you're an average trader. You need to make sure you learn more, understand these things. So if you're trading on gold on CFD level, it does not take you into account that you need to understand some of the fundamentals that follow those things, because those fundamentals are more real, or they are more realities that control the price of whatever thing you see on internet. The same thing now I'm telling you on oil. I'm referencing to those that are learning with us new. So this should be our expected profit. Then when you want to place a trade, there are other factors you need to consider. For those of us that are new, there are what is called volume. Volume on CFD, it's called volume or lot size. Like what I mentioned here now, you see, I put $10, then I put two lot size. Okay, there's a mistake here. This is supposed to be two, no, this is supposed to be one, not two. There's a mistake. This is supposed to be one, not two. Yeah. It's supposed to be one. Yeah. So I put a $10 here, and I put one as a bracket. This one lot means $10 volume. So if you see here now on Oyen, the least you can have on Oyen on some of the broker is 0.01 lot size, which is about 10-cent volume. So when I said volume using dollar, I'm not talking about $10 capital. Some people who doesn't want to learn more, we think somebody commented on my YouTube one day asking me how can $10 gain so amount. For a sense, I think that $10 is a $10 volume means $10 capital. So you need to know those terminologies. So now, if you're talking about 0.1 on oil, like in volume, it will give you about $1 movement. So let's say you have an account of maybe $5,000 or $3,000. You want to use those kind of volume, it will go. But if you have an account of $1,000, you may not be able to use one lot, unless if the broker is giving you high leverage. Of course, you're gonna take a high risk. And if analysis work the same way we're talking about it means that $1,000 can become a lot of money, because that is how the leverage product work. It can give you more money than the spot market. So that is how to select your volume. Let's say you are using 0.2, it means $22 movement. But why in Forex, I said this yesterday, in Forex, this means about 20 cents. So you need to know some of these things to control your lot size when you want to place a trade. Then now, like when I said that we're gonna target 200, 350 pips in generally here, that's on average. It means we're expecting this market to go up again to 2%, which will give you about 200 pips on average. So we can multiply to $1 times $10 times 200, which would be about $2,000. So if we are using 0.2, we multiply $20 times 200, which will give us about $400. That's how we make the profit in CFD. I'm talking to those of us that are new on oil. So what you have to take into account on oil is one, the level of supply and demand. That's what you have to take into account. Two, the price movement of oil. For example, now, if the price is very low and a lesser supply, you could be able to buy more. Then if the price is very high and there are more supply, it should be consigned in selling. These are the things that you consider. Why in Forex, we consider some factors such as interest rate, employment rate, and GDP, and so many other things we consider, particularly of that particular country you are trading, not generally. Not you cannot use Nigerian GDP to trade US currency. You have to consider the US GDP, the interest rate, and everything to be able to trade them. So there are a lot of factors you consider on Forex. The same platform, we consider a lot of factors. Why on oil, these are things that we consider. We will consider the price. Then this price too. The other things you also consider what you call support and resistance. What supports the price, like the area that the price will get to and refuse and they struggle to fall down, and the area the price will get to and struggle to rise. Those things is what to consider as support and resistance. Something like here now form a little bit of support on oil, which is around 55.80, and this area are all considered lower price of oil. So it's like a buying zone for oil. Even this price we're talking